Okay, so we are recording right now. So basically, before we even get started, I want to make sure you guys can hear me. I want to make sure you guys can see my screen. So drop some 222s if you guys can hear me and see my screen so we can get started, so we can move, so we can work. Okay, awesome, awesome, awesome. Now, today looks like a very complicated day in the markets, right? Looks like we got a bit of everything in the markets today. Remember, the first thing that we always want to do when we are about to trade, right, is we always want to check the news, right? Now, the reason why we always just want to check the news is because we always want to keep updated with what's happening so that we don't get caught, in anything that we weren't expecting, right? It's very important for us to understand and be able to identify what's really happening all around the world, because we understand that the currencies, they fluctuate, every single day, right, on a daily basis. They gain strength, they lose strength, and that's sometimes majority of the time based on the news, right, based on what is shared, around those currencies, right? So we always, it is our responsibility and our duty to then keep tabs on what is really happening so that we can be able then to identify whether or not a specific currency is going to gain strength or lose strength, and if we are supposed to avoid a specific currency or not. All right, so how do we do this? So obviously Forex Factory is a place where I always look at my news, right? And the reason for Forex Factory for me is because it really just basically simplifies, how I can actually observe and look at the news, right? So basically we have 4 different types of folders, right? We have 3 today in the markets. The one folder that we don't have is a silver or your gray folder, which means that there is a bank holiday. So we don't have any bank holidays today, which means that any and every currency pair in the market is moving, right? Is moving. We understand that, the banks are the market movers, right? So your banks are the market movers. So what does that mean? It means that the banks, they basically sort of control the markets. All right, the banks, they basically sort of control the markets. So it's our responsibility then to identify and to, look at whether or not, what are the banks doing, all right? Are the banks, buying a specific market? Are they selling a specific market? Because we understand that whatever the banks are doing, majority of the time is what the market overall is going to start doing, because they are the ones who low-key control the markets, because they control about 80%. They make up about 80% of the market, and that is a $6.6 trillion per day market, right? So basically that means that if a specific bank is then on a holiday, that means that that market mover can't move the markets because there's no money being flooded or being pushed out into circulation, right? But anyways, enough about that. We can clearly see we don't have any bank holidays today, so I don't want to dwell too much on those, right? But what do we have? We've got 3 types of folders, right? You've got your yellow folders, you've got your orange folders, and you've got your red folders. So what do these folders mean? Your yellow folder means low impact, right? It means low impact. So what does that mean? It means that when you see yellow folders, that means that whatever news are going to be shared on that specific currency, right, is not going to really have that big of an impact, right? That's what the yellow folders mean, right? So for me personally, I always tell people, when you only see yellow folders, that means that there's going to be a good day in the markets, because that means that the markets are really not going to have that big of an effect in the movements. The news, I mean, aren't really going to have that big of an effect in the movements of the markets. All right, so it's purely just going to be based on price action and what the market movers want to do on that specific day. All right, so a orange folder, which is the next type of folder, is then an indication of medium impact news. Now, I always tell people to say that you can trade your orange folders, right? But you want to be very careful and use good risk management, because we don't really understand how big of an impact that could be. It could be a bigger impact than we thought, are less of an impact than we thought, right? But not to say that we can't be in the markets when there's medium impact news. It's just that we need to be very careful and understand that, hey, listen, I need to be cautious when I'm trading this specific currency because I don't really understand how big of an impact this actually can get, right? So I need to, err more on the side of caution more than anything, all right? And then the third folder is obviously then your red folder. Right now, we understand red in a lot of things means danger. Red means stop. Red means run away. Right? Stop. Don't go there. So even here, right? Red means high impact. Red means volatility. Red means, hey, I definitely don't want to be in the markets when that is happening because I understand that that's going to have a high, huge impact on that specific currency. So I don't want to be trading that currency around that time because that is going to have an impact. But also, not just that currency when it is specific currencies. Now, I'll give you guys an example, right? USD, right? When we have red folders on the USD, right? It's very important for us to understand that first and foremost, the United States dollar is a universal currency, right? This is the benchmark of the whole entire world, right? Majority of things are measured against the US dollar, right? So what does that then mean? It means that whatever is happening to the dollar, majority of the time is going to affect the whole markets, right? So not only am I not going to be looking at anything that has to do with the USD around 330, but I'm not interested in looking at the market in its entirety because I understand that when there is high volatility and high impact news on the US dollar, majority of the time that's going to affect the whole market because the whole market is actually benchmarked against the USD, right? So that is a sign and an indication for me to stay away from the market. So today around 330, I do not want to be in the markets because I can see that USD is going to be very volatile, which, by default is probably going to have an impact and an effect on majority of the other markets. All right. Are you guys with me? All right. Drop some 111s if you guys are with me. All right. So we can, progress. Right. So I want to be very careful in the markets, around those times. Right. But what I am looking at, right, currently right now, it's around 6. We're trading the morning session. Right. So what does that mean? It means that I'm looking at around 6 and I'm seeing that, okay, listen, around the time that I'm actually looking at the markets today, there's not really any big news that could affect. I mean, the first sign of red folder is around 9 a.m. We're going to be long out of the markets around 9 a.m. today, right? So we have an opportunity right now for this morning session to actually look at any and every currency pair that we actually want to look at, right? So that's the first thing I want to do, right? Is I want to observe, I want to look at the markets, I want to see what's happening in the markets so I can get a clear indication of which markets am I avoiding, which currencies am I looking at, which currencies am I not looking at, around what times do I want to trade, around what times do I not want to be in the markets, around what times am I expecting a bit of volatility, around what times am I experiencing, low input news, what is the best time to trade in that specific day. And this is all depicted right here, right? So obviously, every time you're going to see a red folder around that time, you don't want to be trading that specific currency. And the best thing about Forex Factory is the fact that it tells you the date, all right? It tells you the time that the news are going to happen. It tells you which currency is going to be affected by those news. It tells you the impact of those news on that currency, and it tells you what the news are going to be. So obviously, we can see that we've got PPIs around the USD. We've got Empire State Manufacturing Index around the USD, and that's what's going to be causing this volatility in the markets. Right here, we've got the count change, the claimant count change, right, around GBP. Here around AUD, around 2:30 a.m., what do we have? We had the monetary policy meeting minutes, and that had a huge impact on the AUD, right? So best part about this is that it always tells you when these news are going to happen, which currency is going to be affected, how big of an impact is going to, or these news going to have on that specific currency. And then last but not least, right, it tells you what are these news, right? What are these news that are going to have this big of an impact on this currency at this time, on this date, right? So it really just breaks it down very simple. And that's why I like it, right? So obviously we've seen what it is that we want to see today, based on the news, right? We understand what we don't want to be, what times we don't want to be in the markets, right? What currencies we don't want to look at, right? But currently right now, because it's the morning session, that's why I like morning sessions, because majority of the time it's very quiet in the markets, all right? So we can look at any and every currency pair currently right now. So the next thing now that I want to do after that is I actually want to look at the trend, right? Now, what is the trend? Drop in the chat box, what is the trend? What is the trend to us, right? What do I always say the trend is to us, right? What is the trend to us, right? Because it's very important for us to be able to identify these different types of trends, right? Because once you identify a trend, makes life much more easier, right? The trend is our friend, exactly. So our duty is to do what is to identify our friends, right? Because why would you not want to identify your friend, right? I'd rather, move with my friend than move with my enemy, right? So it's very important for us to be able to identify these trends. Now we have three types of trends. You've got an uptrend, you've got a downtrend, you've got a side trend, or a market that's ranging or consolidating, right? Three types of trends. But obviously, your goal is to identify and be able to spot the two most important trends, which is your uptrend and your downtrend, right? Now, when I say the trend is your friend, what does that then mean? It means that you always want to do what the trend is doing. You always want to move with the trend. So, for example, if we are on an uptrend, you want to buy that market. And if we are on a downtrend, you want to sell that market, all right? An uptrend, you want to buy. A downtrend, you want to sell. And then a ranging market or a consolidating market or a side market is a market that needs a bit of patience, because you want to wait until the market either breaks on the upside, which is an indication that it wants to start an uptrend, and then you continue to buy, or you wait for it to break on the downside, which is an indication that it actually wants to sell, and you start looking for sell ideas, right? So now it brings us then to, how do we then identify these trends? How can I spot an uptrend? How can I spot a downtrend? Very, very simple, right? Now we understand that we have currency pairs in the markets, right? So, which is basically the exchange of one currency for another, right? Now, we've got a lot of currency pairs: AUD JPY, USD JPY, GBP AUD, GBP USD, Euro AUD, right? Now, a currency pair comprises of two currencies, right? Your base currency and your quote currency. Now, your base currency, right, is always your first currency. So your first currency in a currency pair is going to be your base currency, right? And then your quote currency is the second currency, right? So meaning that the second currency in the currency pair, right, is then your quote currency. Now, in order for us to identify successfully an uptrend, what do we have to do, right? We have to be able to identify the strengths in the different currencies, because the strengths in the different currencies is going to tell us exactly what the market is trying to do. Now, for example, on an uptrend, right, when we are expecting the market to push up, right, what we want to see, all right, is we want to see the first currency, which is the base currency, stronger than the second currency, which is a quote currency, right? So every time we are on an uptrend, right, we always want to make sure that the first currency is stronger than the second currency, because that is a clean indication and depiction of an uptrend, right? Now, the opposite for a downtrend, which means that the second currency, right, has to be stronger, which is the quote currency now, has to be stronger than the first currency, right? Then that is an indication of a downtrend. And obviously that is when we are going to start looking for what? For sell ideas, right? Now, let's look at what we have here, all right? Now, I'm going to call out a few currencies that I want us to look at. Euro JPY being one of them, GBP JPY being another, USD JPY being another, AUD JPY being another. Now, if you guys notice, all right, if you guys notice the currencies that I'm choosing, you'll notice that they all have something in common. And that thing that they have in common is the fact that they are capitalizing on the JPY weakness, right? Now, my chats are, I like trading currency pairs where I can see a huge difference in the strengths, because then that's going to give me more confidence in the direction and in the momentum of that specific move. For example, right, I would not want to trade AUD USD. I would not want to trade GBP USD, because look at the strengths, right? They're very, very close together, which means that there's not really any indication of a big move to either the upside or the downside. So I don't want to be in those specific types of situations where I'm having to sit at the edge of my bed and hope that the market actually pushes in my direction. You know, I want a market where I can be comfortable because of the difference in the strength, you know, is telling me that, hey, there is a bigger push in this direction, which means that there's more momentum in this direction, which means that there's a higher probability of the market playing out how you want it to play out in that specific direction. So we can see, I'm seeing here that JPY is very weak today. So what am I trying to do? I'm trying to capitalize and look at how many strong currencies are there against the JPY and then capitalize on those. So that's why I'm looking at Euro JPY, GBP JPY, USD JPY, AUD JPY. But I'm also looking at, look at CHF. So probably also USD CHF, probably Euro CHF, probably AUD CHF, also looking good. All right. Now, in both of these that I've actually called out, all right, whether it's, you know, capitalizing on CHF, capitalizing on JPY, what do you think I'm looking for? Am I looking for buys or am I looking for sells? Because in both of these scenarios, I'm looking for the same thing, right? AD JPY, USD JPY, GBP JPY, Euro JPY. I'm all looking for the same type of trend here, right? Am I looking for an uptrend or am I looking for a downtrend? Same thing with USD CHF, AD CHF, Euro CHF, right? Both of these are actually similar, and I'm looking for the same type of trend. So drop in the chat box what you think I should be looking for. Am I looking for an uptrend? Am I looking for a downtrend? Am I looking to buy or am I looking to sell these currencies? What do you guys think? Let me refresh, because it's very important for me to always stay updated with the strength. Drop in the chat box what you guys think. Are we looking for uptrends? Are we looking for downtrends here? Thank you. Thank you. We're looking for buys in all of these currencies. So let's go and let's go see what's happening in the markets, right? Look at that. Look at that. This is Euro JPY. First thing that we note is we note an uptrend. Look at the market, all right? Market has been pushing to the upside, all right? Now, obviously, we can see the market has been pushing to the upside, so it's our responsibility to continue with the trend, right? Because the trend is our friend. We can see this is a clean uptrend, all right? Market pushing heavy to the upside. So now our duty is to be able to identify and follow the trend. Simple. All right. So on an uptrend, what are we always looking for? We're always looking for what? Ceilings. All right. Because ceilings turn to floors. So I can clearly see a ceiling at this area. All right. I can see a ceiling here. All right. Market bounced here, but also previously this turned into a floor. Look at it was the floor. It turned it into a ceiling. All right. Now I'm looking to treat it as a what? As a floor. What else am I looking at? I'm looking for this area here. Obviously, definitely keen on this area here. So My next potential buy area then would be either here for this buy to continue with the trend, or here to continue with the trend. All right. Now, this is all going to depend on how price moves. Remember, our duty is not to be the gurus of predicting what price is going to do. Our duty is to identify what the market is actually doing and then follow the market. All right. The trend is my friend, and the market will always tell you what it wants to do. So obviously, I'm not going to be naive if I see that the market doesn't want to respect this area and take a buy here when I can see that it wants to push down. I'm going to wait and look at what the market wants to give me. And then if I see that, okay, maybe the market wants to come buy around these areas, then that's when I'm saying, okay, this is where I'm going to take my buy. I'm not going to say, nah, it has to buy here. No. If I can clearly see that the market is not ready to buy at this area, but it does want to buy at this area, then I am going to be patient and wait for it to break this area to come buy here. All right. Now we can clearly see the market is making a bullish move right now, right? Which means that it's breaking this area here, right? It's breaking this area here. Now, obviously, this was also a what? This was also a ceiling, turn into floor, turn into ceiling again. So we're expecting it to turn into floor again. All right. If you look to the left, right, price will always tell you what it was doing previously. That's why I like previous price action. We can see price came here, it bounced once, it bounced twice, eventually it broke this area, came back, respected this area as now a what? As now a floor, right? Boom, pushed up, right? Came back in, boom, pushed out, broke the structure, came back to retest, dropped, pushed back inside the same area, dropped. So obviously this is a critical area because a lot of things have been happening here. So when the market breaks this area, then it is not wrong for us to expect the market to push up and then to come back down into this area and then to continue with the trend back to the upside, right? So that could be also another move, right? So our duty is just to be patient right now and wait for the market to give us what it wants to do, right? So we're going to look at the market. The market is going to tell us what it wants to do. But in the meantime, let's look at GBP JPY because we're also looking for buy on GBP JPY as well, right? So let's open GBP JPY. Okay, here's GBP JPY. First things first, are we on an uptrend? Yes, we are. All right, market is on a nice uptrend. All right, now second thing we want to do is we want to identify what? All our critical areas, all our important areas. And look at how the market behaved at that area. Look at this. This was a floor, all right? Market broke this floor, turned it into a ceiling, broke back upside, turned this ceiling back into what? Into a floor. Boom. Made that major push, all right? Here, also critical area. Look at what was happening around here, all right? Market pushed up, bounced, eventually broke this area, but came back down, bounced, boom, respect this area again. As soon as it breaks this area, we're expecting this, right? Look at how many times it bounced at this area and then boom, major push to the upside, all right? So that's also a critical area, all right? What else do we have? We've got this area here, all right? Can we all agree that this area is also a critical area? Can we all agree this is a critical area? Look at what happened. Market bounced at this area, broke this area, turned it into what? A ceiling, fell, came back, respected around this area, fell again, came back, fell again, broke this area, came back to retest, market pushing up, right? So this could be my ideal area for me to buy, right? This could be my ideal area. So if the market pushes back down into this area, this could be my ideal place to continue to buy this market, unless market continues to push up to break this area and then come back to respect this area, and then that can be my opportunity for me to continue with the trend. All right, but for now, this is my ideal place where I like to buy until otherwise. All right, until otherwise. Are you guys still following with me? Right? Are you guys still following? Drop some 111s if you guys are still with me. Right? Drop some 111s if you guys are still with me. And I'm not losing you guys. So that is what I'm looking at on GBP JPY, right? So I'm looking at Euro JPY, and I'm looking at GBP JPY, right? Look at what happens here. Look at what happened here. Market broke this area, came back to this area. So let's see how it's going to behave around this area, right? Broke. Let's see. But in the meantime, let's look at something else, all right? I think USD JPY, we were also looking for a buy. I think we were also looking for a buy on USD JPY. So first thing that we want to do, are we on an uptrend? Boom. Yes, we are. All right, clean uptrend. Hey, I'm using the wrong thing here. Clean uptrend. All right, we can see market bullish, pushing to the upside. First area that we can note, definitely this one. All right, what do we have here? Had a ceiling, boom, turned into what? Floor. Market broke, came back to retest, pushed up. Second area, right, that we can note is this area here. Look at this area. Why is this area important? This was a floor, but then it turned into a ceiling, but then the market broke it and now came back down to treat it as a floor again. And look at what happened. Market pushed up all the way from that area, all right? Now, we also have this area here. Now, if I start this area here, let's start from here. And I drag this all the way, all the way, all the way, all the way, all the way to here. What can we see here, right? Floor, broke floor, turn into ceiling, falls, turn into ceiling, falls, comes back, breaks this area, comes back, treated as a floor, bounces, breaks this area, comes back, treated as a ceiling, falls, comes back, breaks this area, comes back, treated as a floor, up, floor, boom, major move, right? Can you see this? Critical area. But now, where the market is currently at, I need to be looking at this area here. All right, this is my area. This is what I should be looking at right now. And I want to see how the market is going to behave. So obviously, market is currently breaking this area, all right, making a major move to the downside. But am I panicking? No, right? Because I still have this critical area here. So if the market wants to push back down to this area, it can still open and be valid for me to buy. All right, just because it breaks my area doesn't mean that the whole world must stop now. Also, what could happen is that it could break this area and then push back up into that area again. Look at what's happening with the new candle. The new candle wants to push back up, but still, if it does want to continue pushing down, it's still opening up an opportunity for me because it could come back to a very strong area where a lot of movements will have happened around this area here, which can give me more confirmation for this move, right? Obviously, this was also a critical area because if you look, if I drag this again further to the left, further, all right, we can see a lot of things have been happening here. This was a ceiling, boom, turned into floor, all right? And then we can see here, there was a lot of things that were happening here, all right? Market kept on giving these long tails, but eventually pushing back up. There was a lot of buying power at this area, but eventually the market broke it, came back, treated it as a what? Ceiling. So now obviously we could be waiting to eventually turn this into a floor again, all right? Into a floor again. Here comes GBP JPY. We can see this massive drop, all right? Obviously, our ideal area would be this area here, but also All right, let's not take away from the fact that the highest point here was actually this area here, right? The highest point here was this area here. So we can't ignore this area, right? As much as, yeah, this is a critical area, a lot of things happen here. We can't not take this area into account as well, because this was the highest point. So eventually price got to this area. So depending on how price moves, because remember, we're also closing in on the Q2 mark right now, right? Now, what happens at the Q2 mark? Reversal. So I could be waiting to buy GBP JPY literally in the next 2 minutes and 50 seconds. So let's all go to GBP JPY, right? Let's all go to GBP JPY. Now, let me quickly break down my what I want to look at before I trade. So the first thing I want to look at, obviously, my first box is the strength, right? GBP against the JPY. Tick that box. That's my first box, right? Number two is, am I taking this trade for if I'm buying it, am I buying at the floor? If I'm selling, am I selling at the ceiling? Currently, we can see that it is at a good area, right? In this gap is a good buy area. We can see market is really trying to push down into this area. So that's my second box, because I always want to buy at the floor. My third box is previous price action. What has price been doing at this area previously? All right. If I look previously, there's a lot of things that have been happening here. We had a ceiling, right? Ceiling, floor, right? So this is a very crucial area. So I take that box. Previous price action is telling me that there's been a lot of movements around this area here. So this is a critical area, right? Number four is, am I taking this on timing? Is it the 15? Is it the 30? Is it the 45? Is it the hour mark? Yes, it's the 45 mark, right? It's the 45 mark. So I can delete this line actually, because I can see that market is actually coming back to my original analysis, which is my original area, all right? So I tick that box now, which is my fourth box, which is timing, because it's coming down on the timing factor. Now, my last thing is, I always just want to check on the Ivanka Bro. Ivanka Bro is going to tell me, look, how many reds around this area, critical area, now turning into what? Into a blue for the SPY, all right? So this is validating this area. This is validating this move, because it's showing me when there's a blue, there's a floor. When there's a red, there's a ceiling. So this area here, if you notice on top of where I marked, was a critical area because it had a lot of red, which means it had a lot of ceilings. Boom, now turning it into a floor. All right. So we understand the break and retest of structure where a ceiling is going to turn into a floor, because we always want to buy on top of what? We always want to buy on top of previous ceilings. So if we can spot a lot of ceilings around the area that we want to buy, that validates our move. So I'm looking at GBP JPY for a 3 to 5 minute buy, right? For 3 to 5 minute buy, right? On your pocket options, on your IQ Send, make sure that the time is up 3 minutes, right? Make sure that you're on GBP JPY and you're ready to buy. We've got about a couple of seconds before the new candle, all right? Now, obviously, I'd love for this market to push down, because I want to buy at the lowest point possible. So 9, 8, 7, 6, it's pushing up a bit. 4, 3, 2, 1. Buy GBP JPYC. But also, what could happen with the new candle, right, is that it could first start to push down before it pushes up. Because I always tell people, right, and I say that when the market is above your area, when it pushes up like that, what tends to happen is that when the new candle open, can you see? I don't know if you guys can see this candle, but it has a long tail. See, when this normally happens, all right, when it pushes into your area where you wanted to buy, and then it pushes up before you jump in on the trade, normally what tends to happen is that when the new candle open, it first wants to fill that gap before it makes that move. So this move could either push up immediately from this area, from the zone it's at right now, or it could first want to push down, right, to finish this move, to complete this gap, and then make its way to the upside, all right? Obviously, we can see now it's still playing around area, right? It's currently pushing up right now, right? There we go, boom. There we go, profits, right? Who is in, right? Who's in on GBP JPY? Drop in the chat box. Look at what the market is doing right now. Market is currently pushing in profits, right? Market is currently pushing in profits on that GBP JPY, right? There we go. Bye, Charlie. push up, go. There we go. Easy peasy lemon squeezy. Drop in the chat box, easy peasy lemon squeezy. All right. Drop in the chat box, easy peasy lemon squeezy, because that's what we just did here. We just took an easy trade. All right. Simple, 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 basic things. All right. Simple, simple, basic things. Break and retest our structure. All right. Break and retest our structure. And we can see price came to that area. All right. And then made that push to the upside. All right. So that was a good analysis. That was a good spot on that GBP JPY. All right. We can clearly see that uptrend. All right. So obviously, right, that was a nice analysis on it. And remember, we took this. Remember the boxes that we ticked. All right. Remember the boxes that we ticked. Let me see if Euro JPY is not behaving the same way. Let me see if Euro JPY, because remember, we're looking at the same thing at both. Look at where it's at. Let me fix this. Euro JPY also behaving more or less the same way as GBP JPY. All right. So obviously it also wants to come to this area here, right, for this buy. And remember, I told you guys, I said that if it breaks this area, am I panicking? No, because I can always catch this trade at this area here. All right. At this area here. So obviously Euro JPY could be, let me look at the strength, because it's very important for us to always keep tabs on the strength. It's very important for us to always keep tabs of the strength, because we don't want the strength to flip on us. Clear GBP JPY. Awesome, awesome, awesome. Love to hear that. I love to hear that. All right. That's beautiful. So what are we looking at again? What was I looking at again? Oh, I just wanted to refresh so I can look at the strength. I'm sorry. Now, GBP JPY could be in a good buy area, right? But is it ticking our box when it comes to strategy? No. Why? Because it's not on timing right now, right? We are way past our reversal zones, right? We caught a nice buy on GBP JPY around the reversal zone, and that's how market started to push up nicely into our direction. Right now, this would have been a technical trade, because technically we understand that price is at an area where it wants to push up. But on strategy, is it ticking one of our boxes? It's not ticking our timing box, because our timing says that we want to take a trade at the 15, at the 30, at the 45, and at the hour mark. Regardless of whether we know how the market is going to behave at this area, does not mean that we need to take that trade at that area, because it's not ticking our boxes. All right, it's not ticking our what? Our boxes. No stress, no stress, no stress. So which other currency did we look at? I think we were looking at USD JPY as well. Can you look at USD JPY as well? Guys, can you see that all these currencies that we are looking at are literally playing out how we said they were going to play out? What did I say was going to happen? I say USD JPY, this is where I'd love to start buying this currency. Look at that. It came, boom, started to react around this area, and now it's starting to push up again. Look at that. Starting to push up again at the area that I marked. All right. So can you see how important it is? Look at that beautiful move, right? Look at that beautiful move. And the best part is that we spotted this move before the market even got to this area. All right. We said, hey, listen, market is going to push down into this area to continue with this trend. And then that's the best time to take this trade for that buy. And look at that. Market got to exactly the area and now starting to reverse for that buy, right? Beautiful on USD JPY. So if you can identify all your critical areas, can you see how easy everything else becomes? All right, because now you know exactly what you're looking for and where you're looking for them. So obviously, I'm still looking for some strong buys on Euro JPY. Looking to see how the market is going to behave. Potentially around the hour mark, this market could start making that big push to the upside, and then that's when I'd love to jump in and trade and take that trade for that opportunity. But we can see now slowly starting. Oh, look at that massive push. Look at that massive push on Euro JPY. Clean. Now, why can we see that massive push? It's because of this critical area. What did I tell you about this area? I said this is a very strong zone. There's been a lot of movements, and every time the market got to this area, something happened. And obviously, like I said, right, I said we were anticipating a market to push at any of these two areas. Also, taking into consideration the trend, right? We're on an uptrend here, and we can see every time market comes close to this trend line, right, what happens is it bounces at this trend line, bounces at this trend line, bounces at this trend line. So obviously, I am looking at this touch here for the market to continue on this uptrend, all right? But ideally, for me to be able and confident to jump in on this trade, I want to take it at the hour mark, because that is going to be a strong reversal area, a stronger reversal time for me, according to strategy, all right? Now, are you guys clear on strategy now, all right? Are you guys clear on the 4 boxes that need to be ticked, right, in order for you to be able to take a trade, all right? But luckily, I'm recording the session so you can actually go back and watch and listen to those 4 things, right? So that you can, start to go back and practice, and take note of those areas and of those boxes that need to be ticked in order for you to be able to take a trade on strategy. And then from there, we can actually start moving. And you guys are going to be good, all right? I don't know if you guys have any questions for me, but that now would be the best time for any questions that you might have. I don't know if you guys want to ask me anything so long. Or if you guys are good. Awesome. Look at GBP JPY, all right? GBP JPY still always being bullish, right? Always being bullish, all right? Still making that push to the upside. So that was a good analysis on GBP JPY. Market really responded to our analysis. We can see it closed in profits, closed upside, right? So that was a good one, right? So if you took that GBP JPY, that was a good trade. It should have definitely, did best with that one, right? Markets continue to play out. So for that 3 to 5 minute trade, right, that price eventually closed in profits, right? And we can see new candle open and it started to push up again. So it's just been bullish, right? It's just been bullish. Now, am I looking to trade GBP JPY again in the next 5 minutes? Probably not, because we can clearly see that it's already making this push. Now, I never want to chase a trade and take a trade that's already pushing in the direction, right? Because obviously for a buy, I want to buy at the lowest point possible. And for a sell, I want to sell at the highest point possible, right? So GBP JPY as it stands right now is already above my buy area. That's why we already took our buys here, right? So I'm not looking to take it again, right? Not looking to take it again unless it drops back down into that good zone, right? If it drops down back into that good zone, then I could potentially be ready to take it for a trade again, all right? But currently right now, I am looking at Euro JPY on the other hand, because Euro JPY looks like it is in a position where I could potentially want to buy. Oh, look at that beautiful move. It's already buying it on its own right now. It wants to make that beautiful move. There's a strong buying power here. We can see that the previous candle closed in bullish move. New candle also wants to start pushing to the upside. Let me look at USD JPY. I was looking at USD JPY as well. Look at USD JPY. Beautiful, beautiful, beautiful. Pushing up nicely as well. So all the currencies that look at that. All the currency pairs that we were actually looking at, right, are really playing out how, we predicted they would play out, obviously taking into account and just looking at what price is telling us and giving us, because price will always give us clues, so beautiful, beautiful trades, right? USD JPY pushing heavy in profits. Euro JPY also around that area is bullish. Look at that, literally at the area market making that massive push to the upside. GBP JPY has always been bullish from the time that we took that trade. So as it stands right now, there's literally no trade that we can take at the hour mark, because we can clearly see that all the ideas that we were looking at on this trade, right? Remember, we were capitalizing on the JPY weakness. All the moves and all the ideas that we were looking at are already making the moves that we wanted them to make, right? So we definitely can't take any of these trades. So we can just watch them and look at them play out and, be proud of ourselves, because, I always tell people and say that sometimes it's not really even about trading. It's about analyzing and making sure that, you're good at analyzing. And when the market plays out in your direction, whether you're in that trade or not, you should be more confident in what it is that you're doing, because it means that you know how the market is behaving, right? Regardless of whether you're in this trade or not, regardless of whether or not I'm in GBP JPY or not, I'm good. I've already made money on GBP JPY now, right? Just by me watching it move in the direction that I predicted means that, what it is that I'm doing and the skill is getting better and better, right? Does that make sense? Drop some 222s if that makes sense. See, sometimes it's not really about making money. It's about the information, the knowledge, and being able to apply it, all right? So that when you can see how the market is behaving, to give you more confidence, so that the next time, you look at the market, it shows you exactly what it is that you want to see. All right. So with that being said, that brings me to the end of the session. All right. Clearly, we had an amazing session. It was a good one. Market really respected and behaved how we wanted it to behave. So with that being said, I will see you guys again in the evening. Definitely recorded this session. So let me stop the recording. I'll drop this back in the group. Stop recording.